Well, welcome to Business Talk, brought to you by businesstech.co.za, South Africa's most popular business news website. As always, I'm your host, Michael Avery, and today we've got a really interesting show lined up for you. Joining me in the studio are two distinguished guests from Discovery Life. We've got Kashmeera Kanji, the head of market analytics and R&D, and Harry Joffe, the head of legal services. And together they bring a wealth of knowledge and insight into the world of offshore risk planning and life insurance. Now, Discovery Life has recently published a groundbreaking report that offers fresh insights into the trends and benefits of offshore life insurance. And today we're going to unpack the report and its implications for South Africans. So let's dive right in. Cash, welcome to Business Talk. I always talk about R&D in journalism being where the rejected and dejected articles go, but R&D so critical in your space. Let's start off with what inspired Discovery Life to publish this report and release this public data right now.
Yes, Michael. I think this is something that we've been thinking of doing for some time, and it just seemed like an opportune time at the 10-year anniversary for us to do something like this. We've done some extensive research on our Dollar Life Plan book, which is effectively a book of sales over the past 10 years on Dollar Life Plans. Dollar Life Plan is truly offshore and authentic risk protection that we've designed in the R&D space. And the report is based around our thinking from an R&D perspective on why this is so important, the trends that have informed a decision to create a product like this and to continue selling a product like this. And then the ongoing trends in seeing consumer behavior around the product, understanding what clients need from the product and evolving the product over time to match those specific needs. So from an R&D perspective, it's been a busy 10 years on this specific product, but a lot being done in the context of, creating a product that's fit for need for people looking to plan for their offshore aspirations.
I can't believe it's been 10 years already. Can you just remind us what your Dollar Life Plan is and why you initially decided to offer it?
Yeah, so the Dollar Life Plan, Michael, it's an incredibly interesting offering. Like initially, we had thought this would just be for a niche group of clients who are possibly your high net worth clients with wealth offshore, seriously considering retirement or immigration in an offshore context. But what we've discovered over the past few years is that this product actually fits every South African. And that really is the story behind what a Dollar Life Plan is. So the Dollar Life Plan is effectively a life insurance product designed as we have here in South Africa, the local Discovery Life Plans, but one that is portable around the world. And the portability of this policy is effectively as a result of many clients requiring a policy that matches the possibilities of them, the endless possibilities of being anywhere in the world, the possibilities of them requiring to educate children offshore, the possibilities of perhaps requiring a medical trial for a condition that they might develop. And there are endless reasons why you might consider an offshore-based life insurance policy. And if not for any of those specific reasons, I think if we take a whole big step backwards, we often think about life insurance as something to protect your wealth. Whilst investments are there to grow your wealth, life insurance is there to protect your wealth. And that, if you think about it in the context of offshore risk protection, if we have the mindset of diversification in an investment context, it is important for us to actually have that same context for protecting your wealth. And that is a life insurance purpose. So that is the core reason why we designed our exact life plan with its flagship benefits to be offshore based as well in the form of this Dollar Life Plan.
Yeah, it makes perfect sense. I mean, if you're going to be expanding your investment universe, and we've been talking about it on my various platforms for years, the fact that South Africa is still only around 1% of the investable universe, you should be thinking about how you insure and protect that wealth offshore as well. Interestingly, your data does show a major trend towards embracing offshore risk planning in South Africa. Could you maybe just expand on this trend and why you believe it's happening at the moment?
And I mean, Michael, I think there's so many reasons why it might be happening, but to start with the actual trend, the trend is we're seeing about 1,200 advisors actively considering offshore risk protection as part of their clients' financial planning. And this is enormous if you think about it in the context of how many people require a financial advisor, and the financial advisory space is not actually that big. For 1,200 advisors across the country to be considering it, that's considerable. The second thing is that we're seeing an increasing number of clients, purchasing this product with a split between their local and their offshore risk protection. So we've seen about 2 in 3 of clients who hold a dollar life plan also have local cover. So it's not just a consideration of should I pick one or the other. Yeah. It's actually a consideration of, how much of cover should I keep here locally, and how much cover should I keep offshore for the purposes of, the various trends that you and I are probably going to unpack today. And then the second thing is, in terms of the trend on our book alone, this is approaching 10% of all premium income that Discovery Life writes in a year.
Wow.
From such a niche group of business that we initially thought it would be, it's become quite a considerable portion of our annual premium income that we earn as Discovery Life.
Oh, that is a very interesting insight. And to your earlier point, it just shows you how it wasn't necessarily just for a very niche and bespoke target market. I think increasingly South Africans are heading offshore for a variety of different reasons. A key focus of the report is how you can use offshore life insurance to diversify your risk protection. And I think that's really important. We talk about diversification in investing. We don't focus enough on diversifying our risk protection at the same time. So can you maybe just expand on how that works?
So, how it works, and I think Harry is best placed to answer or to give you some administrative constraints around the product, or even the administrative eases that we've created in designing the product. So I'll allow him to tackle that in a short bit. But effectively how it works is you pay a premium here in South Africa or from offshore. We've created that type of flexibility that premiums can be paid from anywhere in the world. And the premium is converted into US dollars through our Guernsey branch. And the cover is then paid out when you select an offshore bank account as your beneficiary into that offshore bank account. So there are no further, it is exactly as you would purchase a local life insurance policy, but for one or two added administrative needs that you might need to provide. But effectively, nothing different. No added burden to the client in purchasing a product like this. In fact, in our new quoting system, advisors will be able to do a single quote and toggle between how much of cover they'd want to place on the local front and how much they'd want to diversify through an offshore policy. So an incredibly easy way to purchase life insurance offshore without you having to make all these considerations of would I be in London, or would I be in Ireland, or would I maybe be in Italy, retired in the countryside? There are so many possibilities, and without you having to think about that, this product is designed in the now. The client can purchase today in South Africa, and it's incredibly portable around the world.
But
I think, Harry, this is an opportune time for you to maybe just give us some insights on how we've designed it to create this administrative ease.
Sure. Cash, Michael, can I jump in with your permission as the chair?
Absolutely. I was about to ask you a question, Harry, but jump in.
Yeah. Sure. So, as you know, Michael, you've had plenty of shows on investments and investing offshore. There are two ways for South Africans to take money offshore. One is using their 1 million single discretionary allowance, or SDA, as we call it in short in the industry, or to apply for a tax clearance certificate, or an ART, as it's now become known. Now, of course, applying for the tax clearance certificate is quite administratively burdensome. So, it's very doable, and South Africans do it all the time, but it involves a process. The 1 million SDA is much simpler. You just, up to 1 million, you can just take out offshore whenever and however you want. So we've linked our dollar life premium to the 1 million SDA. So we actually debit the client's RAND account every month. We transfer the money offshore, and then we report to staff every month on the BOP form, and we allocate that against the client's SDA. Of course, it does mean if the client hits their million rand limit in a year, then they would have to apply for a tax clearance certificate to carry on paying premium, but that's only a very small percentage of our clients. And then carrying on with what Cash had said, we're quite careful in our premium. So our maximum premium that we allow if you're using your SDA route is $4,000 a month, because anything above that, the client's probably going to exceed their SDA. So we limit the $4,000 a month premium for SDA clients. But if they're not using the SDA, they're paying with money already offshore, which we'll get to just now, then that limit doesn't apply.
So, Harry, I mean, that's really interesting. Effectively, what you're saying is that you've offered a way for clients to get this exposure without having to go and traipse off to the Reserve Bank to get clearance for every monthly payment. And I think from an administrative perspective, that is a huge pain point. It's probably been why we haven't seen a greater use of this kind of offshore risk diversification strategy in the past up until now. From a legal and regulatory perspective, though, Harry, are there any restrictions on how much money one can invest each month or year into the Dollar Life plan?
So, yeah, Michael, as we said, your SDA allows you R1 million a year maximum. So if you're paying premiums from South Africa using the SDA, we limit your monthly premium to $4,000 a month. At 4, at 12, at $48,000 a year, you can see you're going to quickly get very close to your 1 million SDA. But as Cash said, we've created a second payment route for a multitude of reasons, but one of which has been this, that some clients are using the SDA for other purposes. They might be investing offshore, they might have hit their SDA limit and still want to take this dollar policy, or they might be living offshore, which we'll get to now. But the other route they've got is they can pay premiums from money already offshore as an annual dollar premium. So if they are sitting with dollars already offshore, they can just do a straight transfer to our Guernsey account, because the policy is issued through our Guernsey office. They transfer an annual lump sum dollar premium to our Guernsey account, and then there's no premium limit, because then there's no SDA restriction and they can pay whatever they can afford, basically. The only limit there would be the underwriting limit. This is life insurance, as Cash said. So you have to qualify for your amount of life cover with our underwriters. So if you're not in great health or your age is against you, you might not get unlimited cover. There might be some restrictions, but that's the only real restriction with offshore money.
And when it comes to tax, if I'm no longer a tax resident of South Africa, can I still take advantage of the Dollar Life plan? How would that work? Because I know there's been a big focus on financial immigration and South Africans ceasing to be tax resident of South Africa. How does this impact the Dollar Life plan?
Right. So great question, Michael. And it's really something Cash was alluding to, how we've been very flexible on how we've approached this product. Because when we started 10 years ago, we only had the SDA route. So you had to pay in rands using your 1 million SDA. And then we very soon picked up this point that South Africans were tax immigrating, even if they're not physically immigrating. A lot of South Africans do that. They move their tax residency to Mauritius and they set up companies there, even if they come back to South Africa every now and then. And the problem is, once you become a non-South African tax resident, then your SDA actually falls away from the next year. So if in 2024 you move your tax residency to Mauritius, from 2025 you're no longer able to use your 1 million SDA. That falls away with your tax residency. So that was why we created the second payment route for all those South Africans that are abroad, no longer tax resident. They can simply pay with dollars that they've already got offshore as an annual dollar premium straight into our Guernsey office. And that's exactly the flexibility we try to build into this product. Depending on where the South Africans find themselves, depending on what their circumstances are, they can choose their method of payment.
And it's clear that you've been, very iterative in the way you've evolved the product over time as well. The report coming back to you, Cash, also suggests that South Africans should get offshore life insurance to match your medical or educational costs offshore. And my partner's son is studying at Trinity College in Dublin, and I can understand the need for that. It really does become quite tricky for medical cover in particular. But from your vantage point, why do you see this as so important?
I mean, on two fronts, so we could tackle them. They're both incredibly unique, but so necessary and an important consideration for all South Africans. From a medical needs matching perspective, Michael, if we think about something as serious but also incredibly common as cancer, that is the number one severe illness for Discovery Life clients in the last year of our claim statistics. Something like that could cost in the region of R1 million per year in terms of the treatment plan. And that tends to be quite extensive. And it is because those costs are often linked to drugs that are sourced from offshore. And a lot of these drugs are seldom available just directly in South Africa. So whilst we have one of the most amazing medical fraternities in the world, the cost of treatments, whether it be robotic surgeries or radiation machines sourced from offshore, or just cancer drugs or medical trials, for a variety of reasons and conditions, those medical technologies and drugs are typically linked to the US dollar, or the costs of it are typically linked to the US dollar. And so hedging yourself for the possibility of being able to afford that better treatment is probably a good consideration. If we think about it in the context of disability, Michael, that's still a medical need, enabling yourself post a disability, 76% of the medical devices that exist in the South African market are actually imported.
Yeah.
Which means that the costs of those devices are linked to currencies outside of South Africa. And so any depreciation in the rand against these currencies would impact on the ability to afford these high-end prosthetic devices or high-end care facilities, if that is the need. And so again, hedging yourself for the possibility of needing to afford those devices and giving yourself the best quality of life post-disability is an important consideration. And the second thing you mentioned, Michael, are education needs. And I mean, you've got personal experience there, but international education is incredibly common. We've got 12,000 or more South African students studying abroad every year. That is a statistic in the past 5 years. And if you think about education inflation, just generally in the US, education inflation is greater than CPI. By about 2.5% more. And then in South Africa alone, that is about 2.6% greater than inflation. So the cost that education increases each year is linked to inflation plus another factor. And then outside of that, you've got not the possibility, as kids get older, the cost of education at that particular level to fit that age group becomes more expensive. So education costs then have this double compound on what they could be in the next year. So planning for that cost of education is so incredibly important. Then we've got the possibility of a child studying internationally. So this is all considering locally. Then if you take it offshore, there are residence costs attached to it, relocation costs, flights to and from home every year. And all of these add up. And so the need for a parent to protect themselves for the possibility of having to fund for an international education in their absence, or if they are ill, is growing in South Africa. And then alongside that, there's a brilliant shared value mechanism that's been paired with this education benefit that effectively allows a parent to use their health asset. And by that, I mean any health and wellness that they engage in throughout the term of the policy will build towards a tertiary education fund that can fund up to 100% of a 3-year degree and even offshore. So it's an incredible product that basically solves the conundrum of, do I save for education or do I put money aside every month to ensure that if I'm not around to save for education, my child's education aspirations are still taken care of, even if that is offshore.
Yeah, and those costs, when he went over, saw the exchange rate at 16 euros, 16 rand to the euro, and it was just... we watched it go up every month almost, and where we now currently closer to 20 to the euro. And we know Dublin, probably one of the most expensive cities to live in, just because there's a shortage of housing as well. So these costs do stack up. Harry, coming back to you, and maybe you can just walk me through that claim process. How does it work if I need to make a claim? Where does the money get paid out? And what kind of costs am I looking at incurring?
So, Michael, I mean, as Cash said, it's a claim like any normal discovery claim. You would lodge the claim, or if you weren't around, your family or your executor would lodge the claim with the claims department at Discovery. We then pay out in dollars to an offshore bank account only. So we won't pay it back into South Africa. It only pays into an offshore bank account anywhere in the world, obviously in a non-sanctioned country. Now, the reason we only pay it offshore is this policy is what we call a non-domestic policy in the estate duty in the Long-Term Insurance Act. And a non-domestic policy is a policy which is issued abroad and which pays offshore. And there's certain estate duty benefits in doing it that way, which we'll come to just now. But so we would pay that in dollars to a bank account anywhere in the world. And then, of course, the heirs, once they've received the proceeds, can do with it what they want. That doesn't mean the client needs a bank account up front, because they would only need to open a bank account if they're the beneficiaries of the policy when the policy is due to pay out. So, life assured passes away, mom or kids are the beneficiaries. They could then open a bank account and we would pay the money into that offshore bank account.
I see. Then how do estate duties work regarding the dollar life plan payouts? I'm sure they must vary quite considerably, given that you won't be liable then to pay South African estate duties.
Yes, because it's what we refer to as a non-domestic policy, paying abroad only, it is not caught by the South African Estate Duty Act, because the South African Estate Duty Act only catches local domestic policies. So this is not a product which is now caught by the South African Estate Duty Act, because it's paying abroad, so there's no estate duty in South Africa. The question abroad is, of course, depending where the client is when they pass away. So generally, if they're in the UK and this pays to a foreign bank account, not in the UK, it shouldn't be estate dutiable, subject to citus tax there either. And of course, any other country, they would have to get specific advice there. But what we like to do, Michael, is we like to link it to an offshore trust. And this is a very nice extra product benefit. We've teamed up with a trust company in Mauritius, and they will offer an offshore trust to be the beneficiary of this dollar life policy. But they offer what we call a short form or bottom drawer offshore trust. Because as you'll probably know, offshore trusts are very expensive. I mean, they normally cost about $7,000 a year, at least, to set up an offshore trust. And that's before you call your trustees and ask them to do any work for you. So these are very expensive little vehicles. What we've done is, through our partnership with this Mauritian trust companies, they'll set up the short form trust, which can only be a beneficiary of dollar life or our offshore endowment wrapper, and that they do for $450 a year. So we encourage our clients to go that route, because then they've got an offshore product linked to an offshore trust, which doesn't pay into any, of the high tax countries' accounts, and that shouldn't be estate dutiable then in the UK or even in the US.
That is a really innovative way of structuring something that I think would be hugely beneficial to a vast swathe of South Africans. And I think on that point, finally, Cash, many might be watching this and thinking that offshore life insurance is just for the wealthy. It's not for me. And that clearly isn't the case, given what you've just described.
Absolutely, Michael. That is such an important point to end this conversation, is that we've got a minimum entry point of $50 to buy into this life insurance policy. And what that means is that it is possibly the most accessible point for anybody considering expanding their financial portfolio to an offshore plan. And $50 is 900 Rand converted today, whereas many investments for a truly offshore investment require, quite large investment values and capital outlays. This is, in fact, quite a lower entry point for people to start building on that possible nest egg offshore. What we've seen is that nearly 3 in 10 of these dollar life plans have a premium of less than $100. Where a South African policy on average on our book is about 1,750 Rand a month. That is the average premium. So in fact, anybody considering a policy around that average premium is actually well within their possibilities to purchase a dollar life plan. And that really does speak to the R&D that we've considered when designing a policy like this, because there are other considerations. It is not just that upfront affordability. With this entire conversation, we've highlighted time and time again that there is volatility between currencies. And that is really why you would consider offshore planning and offshore investing and offshore risk protection, is because of the volatility and the shifts between currencies that are completely beyond a consumer's control. It's linked to economic circumstances, political circumstances. And so the volatility is what affects someone's ability to buy at any point in time. What we've done through the product and through the R&D evolution of this product is designed what we call an exchange rate protector, which for an added premium can be added onto the policy, but then it locks in the exchange rate for rolling 3-year periods. So for 3 years, the client has absolute certainty that if they've come in at 18 Rand to the dollar, that is locked in for 3 years. At the next 3-year period, we then lock in a new exchange rate, and that will continue until the end of the term of the policy. So that creates this sustainability of the policy in the long term and allows consumers to understand what they will be paying on a monthly basis for offshore risk protection. And then finally, Michael, if I may, Discovery is, and the group as a whole is designed on integration and on shared value. And through this mechanism, also on our Dollar Life plan, we allow our clients to, again, convert their health asset, which is their engagement in health and wellness, into real-time sort of paybacks that they can experience. And this is quite useful because actually clients are then getting this health asset in the form of US dollars deposited in an offshore account, supplementing any savings or any retirement savings or planning that they might have offshore already. So that's an incredible useful way to start building towards that through a life insurance policy. And we see that our Dollar Life plan clients are actually quite significantly engaged in comparison to our local clients who just have local plans. So we've built up about a $66 million payback in force at the moment, with another sort of retirement play of nearly $56 million. So it is significant, and I think it's an incredibly useful way to improve access to a product like this, create the most cost-efficient way for people to start considering offshore financial planning.
It's really
Marcus,
interesting.
I can just jump in on a point here,
Harry?
just to illustrate how unniche this product is. If I look at my own circumstances, I have a RAND policy, and I've got 2 kids who are just newly qualified as engineers. They are far more responsible than both their parents. They are far more savvy with money than both their parents. So I've converted my RAND policy to a dollar policy because I want to make my kids a beneficiary, not my wife. Not that I've got anything against her, but they are much sharper than her and much sharper than me. And if I were to do that with the RAND policy, that policy would be estate suitable because it would be a deemed asset in my state as a RAND policy.
Yeah.
Because it's a dollar policy, I can now make them the beneficiary. They can get the dollars wherever they are in the world in 50 years' time. And there's no estate duty in my estate. So it's just a simple estate planning and an estate duty saving mechanism without being wealthy or niche at all. I think most middle-class South Africans could consider that little maneuver just to get asset to their kids as well.
Absolutely. I think that's a great concluding point, which takes us to the end of what has been a really interesting conversation. I'm sure you're thinking, maybe, Harry, you could just end on this last note of ways that we could include vesting a life annuity, which which can choose its beneficiaries through something like this as well, in a structure that helps us minimize the burden on our beneficiaries, often our children, when we look at these products. But maybe we'll leave that as a conversation for another day. That concludes today's episode of Business Talk. A big thank you to our guests, Harry Joffe and Kashmeera Kanji from Discovery Life, talking a little bit more about the incredible growth and evolution of the Dollar Life plan. It's celebrating its 10th anniversary, and certainly no longer just the perceived niche product. It has huge applications for offshore estate planning and diversification. If you want more detailed information, you can read the full report from Discovery Life. It's available on the website, and maybe just reach out to them or reach out to your broker and ask them a little bit more about the Dollar Life plan. And as always, stay tuned to businesstech.co.za for the latest in business news and expert analysis. Thanks for tuning in, and we'll see you next time.